This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachardis. Thanks for joining us at XM.com. Equity markets were struggling for momentum on Wednesday as the IMF's latest economic forecast served as a reminder to investors that the virus crisis will take a heavy toll on the global economy. In its April report, the IMF projected that the global economy would contract by 3% this year, making it the worst downturn since the Great Depression of the 1930s. The gloomy predictions come amid doubts about the lockdown exit strategy being devised by hard-hit countries, as there are worries of a second wave of infections if some measures are relaxed too early and that a complete lifting of restrictions may be a long time away. Hopes that the lockdowns could be eased soon had contributed to yesterday's risk-on tone, helping traders to shrug off disappointing earnings results on Wall Street as the season gets underway. Despite the negative sentiment, however, trading was relatively subdued, with the U.S. stock futures down about 1%, as the series of interventions undertaken by the Federal Reserve over the past month appear to have sedated the markets. The Fed's extraordinary actions to backstop just about every part of the U.S. economy may have been a boon for equities, but they probably put a ceiling on the dollar's rally. The dollar index quickly recovered from a two-week low brushed overnight to climb almost 0.5% as the risk-on mood soured. The euro was down about 0.4%, despite the Vice President of the European Commission reviving hopes of corona bonds to raise possibly up to 1.5 trillion euros in virus recovery funds. But the Australian and New Zealand dollars were the worst performers, plunging by more than 1%. The Canadian dollar was another big loser as oil prices extended their decline. Moreover, there is speculation that the Bank of Canada might ease policy further when it meets later today, and that could further undermine the loonie. Attention will also be on retail sales and industrial production numbers out of the United States later today. Retail sales are expected to have plummeted by a staggering 8% over the month in March. Given the shaky market sentiment today, a worse figure could aggravate the risk-off moves. This is today's Daily Market Comment. Thanks for joining us at XM.com.